start with the balance sheet and just call your attention to two items that are maybe a little different. You'll see a new line at the bottom of the assets called restricted assets for capital projects with $52 million there. That is the state lottery bond proceeds that were granted to TriMet on the balance sheet.
Right after the delegated authority report, the first. Right before the blue sheet. So
yes, right.
First page right below.
I'm not sure I have it in the right order here, but so this $52 million is good news. Is our first draw on the state lottery bond proceeds granted to TriMet for expenditure on the Portland-Milwaukee line. It's the first installment of the $250 million grant, which was approved by the legislature to fund the early stages of the project. So it's very important early money, and we've met all the requirements and are drawing down as we need to. So you will see that number continuing. And under liabilities, one thing I'd like to point out, if you look compared to last year, you'll see that long-term debt is less than last year, and that's primarily because we continue to pay down the 2006 bonds as we receive FTA grants for the Green Line. So as we all know, the Green Line is open, construction is completed, but this just illustrates how FTA grants continue to come in after we've expended the funds. So as we've mentioned before, we anticipate the rest of those funds coming in next spring, and we will then pay down or defease the remaining portion of the 2006 debt. But it's a way to see on the balance sheet this leg of how FTA funds come in after we've spent the money. If you turn to the operating statement, I'm going to start with expenses. And it's difficult to draw any conclusions with 2 months of data. But as we've said all along, we're watching the budget very carefully this year. And so far we're seeing expenses under budget. And I just want to highlight one item, which is the lift accessible transportation programs, which are significantly under budget in the first 2 months, about 14%. And this is consistent with what what staff is seeing, which is there's been lower usage of the LIFT program. And we believe that this is due to lower employment, consistent with what we're seeing in the region, which I'll talk about later. On the revenue side, again, 2 months of data, but we're seeing overall passenger revenue lower than budgeted by about 6.5%. And as we'll discuss, we did anticipate some growth in passenger revenue this year with the introduction of the Green Line. These are August figures, which are before the Green Line, but we're just watching these numbers very carefully. We're also, of course, watching payroll tax data very closely, and I'm looking at actual tax receipts, which we get weekly from Oregon Department of Revenue. So I have data from last Friday, which isn't shown in the August close. And what that appears to show is that first quarter receipts, July, August, September, are down about 3% from last year. And that's even though the tax rate is higher this year. So as you recall, our fiscal year 10 budget that you approved assumes negative growth in payroll taxes through the end of this calendar year. But if it continues at this rate of decline, it will actually be worse than what we projected. So again, two months of data, 2.5 months are hard to draw a conclusion, but we're monitoring this very carefully and we'll report back to you. In the context of the overall economy, there are signs nationally that the steep decline is leveling off nationally, and many people will say we probably hit the bottom. But many economists, and particularly the Oregon State economists, believe that recovery and job growth is going to be slow or flat for at least a year. And I think that's what we were seeing. Last month, we showed some little bit of positive in the July employment growth, and not growth, but slowing of decline. But the August data, which came out this week for the state and our 3 counties, is very negative for all 3 counties. The unemployment rate rose in all counties. Multnomah is at 11.9%. It's, I think, the highest rate ever, or close to it. Clackamas, 11.5%, and Washington at 10.4%. As you might recall last month, Washington actually, the unemployment rate went down. It was down to 9.7%, and so a big jump this month. All of our counties are higher than the national rate of 9.7%, and all 3 counties have lower employment than last month by over 3,000 jobs. And the statistic I keep looking at is where we are from 1 year ago, and our 3 counties have 54,000 fewer jobs than 1 year ago. So while there are hopeful signs of national economic recovery, such as the improving stock market, which we're all happy to see, and more housing starts, our tax receipts and the local employment picture has not shown that recovery. And because our payroll receipts are dependent on wage and job growth in our region, we're not optimistic right now about a quick turnaround. So we'll continue to monitor and report. I'm sorry for the bad news. And just to conclude, I just want to call your report briefly to the investment report. There are no significant changes since August. And as has always been the case, our portfolio remains invested. Over 3/4 of it is in U.S. Treasuries and agencies, all rated AAA. And the rest, virtually all of the rest of it, is in the state of Oregon local government investment pool, invested by our treasurer. Happy to take any questions.
Questions about George?
Yeah. Beth, during your financial reporting, you often make reference to variances as compared to last year's actuals versus this year's actuals. But I noticed that in our reports all the time, the variances is the budget, which I fully understand.
Yeah.
And so a question maybe for you, the Finance Committee, should we be getting written reports that also show comparisons to actual, or is it sufficient enough just to get them in the context of when you make your report on a monthly basis?
We'll certainly take your guidance on that. Usually when I'm referring to last year, I'm looking at sort of macroeconomic data. We report versus budget because there's looking at last year's budget line, for every line you would have to address the specific circumstances of that. But we could certainly do that. When we do our budget, and we do a monthly budget, there's a lot of work that goes behind that, and we don't just take the budget, if it's $1,000 for the year divided by 12. We look at what the historical payment rates have been, so we think that's a good comparison. And it's why I go back to what the underlying assumptions were in the budget, what the growth in the payroll tax, what growth in revenues underlie the budget that has been approved, and then how we're measuring up against that. But I'm happy to do whatever the board would like to see, but we could discuss it in the Finance Committee.
Well, one thing I would offer is when I think about this, and particularly if I put myself into your shoes, we've gone through a very difficult time with you all on adopting the budget with $31+ million reductions and so on. And that is, just as Beth said, built on a whole lot of assumptions, both on the expenditure side but also in the revenue. The value of it being against budget is you get to see whether or not we're kind of predicting, did we predict that right, or is it likely we're going to have to come in and do additional reductions, or is it in fact showing better performance? So if I were in your shoes, I would want the budget, because that kind of says, hold it, we kind of set a benchmark. Are we kind of doing against it? Last year, there are so many variables. I mean, if you think about ridership, doesn't have the green line in it. We will have